welcome you today for the Kekst CNC panel to discuss the impact of COVID-19 on ESG priorities. By way of introduction, I'm Vanessa Neal. I'm a partner in our London office, and I'm joined by my colleagues, Helena Norman, also a partner of Kekst CNC and managing director of our Stockholm office, and James Johnson and Tom Lubbock, both senior advisors and global heads of our research offering. I'm delighted today to welcome two industry leaders on the topic of sustainability and ESG. Rob Cameron is global head of our public affairs at Nestlé. He joined Nestlé in February this year and is responsible for Nestlé's continuing dialogue and engagement on the topic of sustainability with the authorities, the private sector, NGOs, and parts of civil society. Rob has over 20 years of experience in the fields of sustainability, corporate responsibility, and stakeholder dialogue. He's led several companies and organizations at the international level, including Sustainability, a respected think tank and consulting firm, and Fair Trade International, the global umbrella organization for the fair trade movement. Tom Fekete is head of sustainability investing for EMEA and Asia at BlackRock. He years ago and led the global product team for iShares and the product solutions and strategy business for the EMEA retail market. Prior to BlackRock, Tom spent 10 years as head of investment products in private banking at Barclays Wealth and UBS Wealth Management. And I thought before we kick off, that I'd give you a brief introduction to Nestlé's and BlackRock's approach to sustainability. Nestlé stands for good food, good life, and believes that business benefits and positive societal impact must be mutually reinforcing. As outlined in its letter to shareholders in its 2019 annual review, its chairman and CEO highlighted, and I quote, "Companies that create shared value demonstrate that business should be a force for good, making a real contribution to society and helping to find solutions to global offerings and challenges is fundamental to our way of doing business." Its shared value approach includes employees, consumers, business partners, and communities. Driven by its purpose, Nestlé has committed to 3 impact areas: individuals and families, communities, and the planet, and their goals are aligned with the UN Sustainable Development Goals. BlackRock is largely viewed as the definitive leader in the global asset management arena. With about $7 trillion of assets under management, it has been entrusted with more client money than any other asset management company in the world. As such, its influence in driving the sustainable investment agenda is very significant. Larry Fink's letters to CEOs and shareholders in January and March of this year, respectively, set out the actions that BlackRock has committed to make sustainability its new standard for investing. These centered around 3 areas: deepening integration of sustainability across investment and risk management processes, including reducing ESG risk in actively managed discretionary portfolios. Expanding sustainability investment offerings, including doubling its sustainability ETFs to 150 offerings globally over the next few years. And increasing transparency on investment stewardship activities to better showcase the impact of the firm's engagement with companies on all subjects, especially the management of sustainability risk. Today, we will discuss the impact of COVID-19 on ESG priorities. As context to our discussion, James and Tom will provide an overview of the findings in our latest COVID-19 tracker research in June, which asked 6,000 customers in the UK, US, Germany, Sweden, France, Japan about their ESG priorities. As a brief introduction, James and Tom joined Kekst CNC in April this year and lead our global capability for our clients. Prior to joining the firm, they ran the research program at 10 Downing Street and the Conservative campaign headquarters. And finally, before I hand over to James and Tom, I'd like to mention one small housekeeping point. If you'd like to ask a question, please could you write it in the Q&A panel on the right of your screen. This can be accessed via the 3 dots just to the left of the X at the bottom of your screen. My colleague Helena Norman is going to moderate the open Q&A discussion at the end of this session. And now over to James and Tom.
Thank you, Vanessa. We'll just share the presentation, which should all be on your screens. Just by means of a brief update about us and who we are. Vanessa sort of mentioned there, Tom and I ran the research at 10 Downing Street until last year, and we've joined Kekst as senior advisors to really try and take that research offer, qualitative, quantitative work, into the more corporate world. And one of the key products we've been working on is a monthly tracker of opinion across those countries that Vanessa mentioned, looking at the impact of COVID-19. And one of the things that we've pulled out for this session is the public's views on ESG, which obviously has a big impact on sort of the rest of the session. Now, before I jump in, just to make it really clear, you know, what we're talking about here are the public and different audiences, different people within the public, investors, high net worth individuals will think differently about these things. And, you know, we're able to dig further into those groups. But for the benefits of this session, we are looking at the general public. And we ran a focus group last week for Times Radio in the UK. And as part of that, we asked people what they thought ESG meant. And it will probably come as no surprise that the public really didn't know what it was about. They didn't recognize those letters at all. I don't think that will come as a surprise to many. But what was very clear from the rest of the discussion was that what those 3 letters mean really does matter to the public and really does matter to the reputation of businesses. The ones they said they thought they were doing well, the ones they thought they were doing, the ones they said they were doing less well, were framed in this context of environmental, social, and governance. So it is very important the public are looking for action from businesses on these issues. Now, the slide you're looking at here, we basically asked people in these 6 countries to identify whether businesses should focus most on environmental priorities, social priorities, or governance priorities. And you can see that across those markets, it's the S, the social side of things, that really captures the most respondents, particularly in Sweden, where 53% are saying that, and in the UK, where 42% are saying that. A little bit closer in France, where environment is on 32%, only 3% off of social, and in Japan, it's actually governance that leads the way in terms of people's priorities. But a really interesting picture there, and I'm sure some things we'll come onto later, suggesting that actually the impact of the COVID-19 crisis has been potentially a shift to the S, and actually a real sort of focus on these social issues rather than necessarily environmental issues. Now, again, I'm sure we'll come on to this. It's not a zero-sum game. You know, people answering this survey would probably want all 3 of these things. But in terms of where priorities are, it does seem that that social is really leading the way. And if we go on to the next slide, we can see what we've done is we've sort of looked a little bit further into where different groups and different people sort of fit where it comes to those priorities. So what you're looking at here is basically a Venn diagram where anyone on this chart further to the top in that E circle are more likely to prioritize the environment, anyone bottom left in the S circle more likely to be social, and anyone in the bottom right more likely to choose governance. And you can see we've mapped the countries on that sort of, you know, accords to what we already knew, Japan and the bottom right there being very focused on governance. But what's interesting here is some of these demographic differences, and this is obviously important in terms of customers, in terms of target audiences. And as I say, you know, we have the ability to dig deeper into this. But a couple of things that come out of it that are interesting. I mean, firstly, you can really see that link to between the COVID-19 crisis and the focus on social, because the people most focused on social are those who are saying that they're most concerned about their health as an impact from the pandemic. And you can see there that group that's flagged up as health concern more than 8 is what that's referring to. So those most concerned about their health, most likely to be focused on social. You can also see that parties that people that tend to support parties which are socially democratic are also ending up in that circle. And perhaps one of the more interesting findings here is that millennial, that sort of younger age group, that younger age cohort, are also moving more towards the social. There's a bit of overlap with environmental, but I think a lot of people assume that these voters, these individuals, are very much, up very strongly in that environmental circle. Actually, we are seeing them gravitate more towards the social. You can also see some differences based on gender. So women more focused on environmental issues than men, and you can also see some of those other interesting generational issues, particularly that actually, where the age groups are concerned, they're tending to cluster quite closely in the middle across all different groups. We're not seeing massively stark generational differences. Again, that slightly butts up against some of the sort of established commentary out of there. So really interesting slide. And as I say, we're able to dig into this more, but that gives you a sense of sort of where people are falling when it comes to this question of what should businesses prioritize out of ES&G. And I'll hand over to Tom for the next 2 slides.
Thanks so much, James, and thanks, Vanessa. So in this third wave of the Kekst COVID-19 tracker, we asked all these respondents, general publics across all 6 markets, to rank 6 different environmental priorities, 6 different social priorities, and 6 different governance priorities. We've actually chosen here to have a brief look at the ranking for social priorities that we found. And there's 2 things I just want to note on this slide. The first is that there is basically unanimity across the 6 markets we surveyed about the top social demand of these 6, and that is health and safety measures for employees. It's a really interesting finding. We found diversity across these markets in all sorts of areas, but complete unanimity in this one area. The second thing to note on this slide is that both of these top 2 measures here, both of the top 2 things that these general public audiences are ranking highest on social, are both concern employees, their internal asks. And this was a strong theme of our Wave 3 report, really, that this employees first theme is coming through during the pandemic. People are looking to companies to take care of their own. So with those findings in hand, we wanted to look beneath the surface and find out what factors drove these members of the public to weight to E, S, or G, as we saw in the first slide that James presented. And we wanted to see whether these factors were, in fact, the top ranked priorities picked out when we asked the whole population in the slide that I just showed you. In other words, which of these actions and messages that you can see on the screen here are best at predicting whether someone chose E, S, or G as the most important in that first slide. And again, I want to talk you through 2 things that came out of the analysis. One is that on the environment side, the best predictor of whether someone chose environment as their top priority wasn't day-to-day activities, but rather reducing single-use plastics. And I suppose the takeaway from this is that the way to reach people who weight to E, who chose E as their top issue, is the issue of single-use plastics. It's stronger than day-to-day activities or sustainable waste management, both of which were ranked higher amongst the whole population. And the final thing to flag is that the theme of employee support, which we just talked about, remains incredibly strong even when we look below the hood. With some changes from the overall priorities for the population, but 3 of the issues in that key top right quadrant involve employees. So mental health support for employees, health and safety for employees, and a strong voice for employees under governance. So we're extremely keen to hear whether these findings match the trends everyone else is seeing, but especially keen to hear from the rest of the panel. So on that note, I will hand back to Vanessa.
Thank you, Tom. So the first question I'd like to ask both our panelists is, to get your reflections on the ESG priorities as highlighted by Tom in our COVID-19 opinion tracker in June. From your vantage points, you're obviously engaging with a number of different stakeholders, and it'd be interesting to get, your views on whether there's been a shift in emphasis from the S to the E. So maybe if I kick off with you, Rob, and then we can pass on to Tom.
Sure. Thanks very much. And I think any of this sort of data is always really interesting. So, and I'm sure we're going to dig into it a lot more over the next 45 minutes or so. I think the first thing I would say is that this is very much a point in time. And when I first saw this, two things struck me. One is I wasn't surprised. And the second is that it was almost like, wow, back to the future. Because if I think back to the very early days of sustainability thinking, the emergence of corporate responsibility, corporate social responsibility in the late 90s, as we presently understand it, business in the community in the UK was one of the forerunners in that space. And one of the things that business in the community was focused on at that time, first and foremost, really, was how do companies look after their employees? So, this was absolutely front and center in those days. And of course, over the course of time, the agenda has broadened and many other issues have come to the fore, clearly environment, clearly climate, and so on. But I think that what this has done, the crisis has in a sense sort of refocused us back on, hang on a minute, companies only exist as A, capital, and B, groups of people. And if it's about groups of people, value lies in those people, and you have to make sure those people are looked after, motivated, and inspired. And I think, from our point of view at Nestlé, thinking about when the crisis hit, I mean, we were, in a sense, I wouldn't use the word fortunate, but we at least had advance warning because our operations in the Far East had experienced this whole thing. And when I joined in February, we were looking south and saying, well, it's coming up from Italy. But we knew what had happened in China, and we'd had some idea. And straight away in China, we'd focused very much on health and safety of our people first and foremost. And that led into a kind of overview of the Nestlé response, which was essentially it was threefold. First and foremost, health and safety and security of employees. And by health and safety and security, what that means is not just health and safety in the workplace, hugely important as that is, but security also in terms of mindset. So thinking about things like, have we put the right things in place with regard to sick pay? Are we helping people in terms of their sense of security around their long-term employment prospects and so on? So that focus on people was absolutely front and center to the company's response right from the get-go. The second thing of the three priorities was to keep supply lines running, to keep shelves and pantries stocked so that people, whoever they were, in any of our markets could access the food and beverages that they were depending upon and the pet foods and so on and so forth that their families need. And that can only happen if the first thing is happening. So those two things were really closely linked together. And then the third piece of it, which sort of broadens it out a little bit, is we understand our position as a food and beverage company. We are part of society, and you indicated that earlier on. And so it's kind of incumbent upon us to lend a hand where we can. And we've done that really in two obvious particular ways. One is the partnerships that we've established with various not-for-profits and agencies, notably the IFRC, the International Federation of Red Cross, Red Crescent Societies. And what's striking about that is that it wasn't just a case of us putting a chunk of money into the IFRC, although we did. It was actually around how do we engage our employees in that partnership on the ground in their markets so that they can participate in this as well. So rather than it being just one great big corporate donation, we actually took the opportunity to push this out to markets and say, here it is. You can work with your local Red Cross or Red Crescent Society. And I have to say the response from people has been frankly humbling, actually. I mean, the amount of money that we raise to employee donations, adds up to, we're talking in really sizable amounts of money that's been donated and into other places as well. So that kind of employee relationship thing actually sort of touches through into that third piece as well. So I think what that leaves us with is that, and in my own personal sense, is that having come back to this importance of our employees and their health and safety, I think that will continue. I think that will be enduring. I think some of these findings, we may find some trends that shift around a little bit. Maybe we'll touch onto that a little bit later. I think this is a point in time, but I have to say, what I'm picking up from people I'm speaking to is that this focus on look after your own people and look after the people, their families and so on, that's going to remain. I think it's going to be an enduring part of the sustainability agenda for time to come.
Thank you very much, Rob. That was a fantastic introduction. So over to Tom, just to get your perspectives on the research that we have done.
Thank you, Vanessa, and good afternoon to everyone. I think this is fascinating. I think this is really a great insights. And actually what's most interesting to me in that research is it's not about science, it's not about political agendas, it's about the consumer, it's about the public, the private citizens, and really understanding where their mind is and what they value and what they prioritize. So it's a great addition to what all of us as management of corporations need to look at. So I will first echo what Rob said. I mean, I think we're fortunate, both him and I, and maybe hopefully many others on the call, that we work for great companies that look after their employees. And so I won't dwell on it too much. The point here is not to advertise for my employer, but frankly, I mean, making sure that companies continue to function and that employees, but not to add to Rob's point, not only employees, but suppliers and clients are also very much looked after is critical. And it's part of culture. So if companies have stated that as their purpose or their orientation, it's good to see that it's actually happening during a crisis. And just like Rob has seen it at Nestlé, I must say I have seen it at BlackRock. So that's great. But beyond that, if we look at the whole sort of economy, we've done also some analysis and analyzed the stock performance, the company's behaviors during the crisis. And it's true that in the past, ESG was very much dominated by especially by climate risk and some other aspects. And it has been a transformation and a real eye-opener to see the S sort of emerging out of this crisis. We've seen it quantitatively, and the source of this information was a little bit unexpected. So that's really corroborating, adding to what you found with the public. We've seen that companies which had more operational resilience during the crisis were better ranked by investors, and their stock price survived better. Of course, they went down with everybody else, but what we've seen is that sustainable portfolios have slightly outperformed. And when we looked for it, and put aside the effect of companies involved in energy or companies involved in transportation, which naturally suffered because of their sectors, we saw that companies which had stronger client relationships, stronger employee programs, looking after health and safety, and also supplier relationships, were the ones that were doing better within each sector. And it's not easy. We'll come back to data. The sources of data to actually measure this are not plenty, but that's something we're monitoring, and we saw that emerging. So at the end of the day, definitely support this research. I would also comment back on the first point that Rob made. He started his commentary saying this is a point in time. And I also think this is very important because that also it makes me think about, is it here to stay? The balance between the E factor and the S factor, where we are today, is that stable? Is it going to go back to where it was before or not? I think the importance of the social angle is here to stay, but the importance of how it's weighted into public policy and into the investment world, I think deserves a bit more discussion.
Thank you very much, Tom. I think leading on from that, it would just be useful to get from both of you your perspectives on, in this sort of unique, sort of dynamic environment that we're in now, is, how can corporates anticipate and prepare for risks And also, how can they improve the goals of their ESG credentials? And maybe, Tom, if you want to kick that off.
Sure. Thank you very much. What we're doing with our firm basically invests in many corporations, as you all know. And as I said earlier, the stakeholder relationships is the key during this crisis. And when we engage with our portfolio companies, the companies we invest in, we have been increasing the sort of a dialogue around employee management and all the questions around loyalty, fairness, and mutual engagement in various relationships, be it with employees, suppliers, or clients. Interestingly, so this was a bit of surprise to a lot of our corporate positions, the stocks we've taken into companies. Not everyone is running a company with the same purpose as Nestlé or BlackRock, and some clients, some corporations are actually a little bit surprised by that approach. But we think that's going to really shape the future of their success. So that's why we're pushing hard on that. In particular, I think the negotiation stance that companies are taking, be it with any stakeholder, will change a little bit, because what's the big lesson is about resilience. So when negotiating a supply chain, or when meaning like a supplier with a supplier or with employees, I think the resilience versus crisis will maybe lead to new trade-offs. And we know in practice, taking supply chains as an example, distance, the dependency on global transportation is being revisited, and shortening routes at the expense of maybe a higher product cost will be a discussion that will take place, whereas in the past it may have less taken place. Also, what we've seen at the political level is an increased desire to become more self-dependent, especially when medical supplies or food is concerned. So I think when we evaluate a company as to whether it's an attractive investment or not, these are new dimensions, looking at how they are going to reshape their corporate setup, their operational principles, and especially their supply chains is going to matter a lot in how we value companies in our portfolios going forward.
Yes, I think a big take out of that for me is that keyword resilience. I really would want to echo that. I'd come at this also this slightly different in the sense of, I'm thinking about what the crisis has taught us and where we can see potentially risks and need for improvement. One of the areas I think that we really need to dig in on is the extent to which this crisis has heightened pre-existing inequalities in society. And I think that's partly why we see the S coming to the fore in this survey at this time, because this is well documented, but we know that the crisis, COVID-19, has disproportionately affected older people. It's disproportionately affected people of BAME ethnic backgrounds. It's disproportionately affected the obese. It's disproportionately affected people who lack access to basic healthcare, and it's disproportionately affecting people with pre-existing health conditions. And I'm sure the list would go on. These inequalities existed before. What the crisis has done has really sharpened the focus on those inequalities. And I think Tom used the word fairness earlier on, and I think that's key. I think people have. Human beings, citizens, whoever they are, have an innate sense of fairness, and I think that innate sense of fairness is perhaps what's driving this particular survey to highlight the S in this. There's one other thing though, which I think I'm not sure that this is necessarily advice that I'd give on preparing for future risks or improving ESG performance, but I do think there's something that we need to pay attention to in the whole notion of ESG, and that being the fact that the environment is seen as somehow separate from the social concerns. And I could make, I think, a pretty strong case to say that if you're interested in ensuring social outcomes, whether it's the health and safety of employees or health and safety of all of our citizens, well, you better start with climate, because, arguably, climate is, of course, it's an environmental issue, and it's always seen as an environmental issue, but it's an economic issue, as we know, and we see all the consequences of accelerating climate change on certain parts of the world. It's a health issue, it's a political issue, it's a kind of everything issue. But if we don't address climate change, then, and looking at that slide that we saw earlier on, we talk about mental health support, for instance. Well, mental health and climate change are already being quite closely linked as far as many young people are concerned. Health and safety of employees and people will be affected by climate change. I think I could also make a similar argument about the connectedness between, for example, transparency, which is lurking down there on the bottom right, and single-use plastics, for instance, because we can't address single-use plastics until we know something about the scale and nature of the problem. So I would see transparency as being one of those things that, actually doesn't sit on its own. It connects to all the other things as well. Now, the conclusion that I reach from this is a caution not to make the mistakes that the advance guard of the environmental movement has made in the past, in past decades. I was looking at this and reflecting back on a paper from, I don't know, it must be at least 15 years ago, called The Death of Environmentalism. And it was a very controversial paper at the time, but the point that it was making is that the environmental movement had not succeeded at the level that it needs to succeed because of its single issue approach to its work, and that failing to see the social consequences of environmental impacts had led the environmental movement not to understand, or fail to understand, that you need to speak to people about the things that matter to them most of all. And just focusing exclusively on an abstract, like climate change, for instance, or like how many, biodiversity topics, which people don't really quite understand when you get into the technicalities, it doesn't make it real for people. And so what I think we need to do when we're thinking about how do we improve the overall thing with ESG is make sure we understand, yes, we've got to focus on things that matter to people, and surveys like this can help, but we also, if we're thinking long term, have to understand the interconnectedness of these issues.
It's a very good point, and it leads neatly on to my next question, which is I'd be very interested on both your views on from a sort of investor perspective, but also from a Nestlé perspective, on whether you think COVID-19 and with its safety and sanitization needs has impacted the momentum we're seeing in pre-COVID sustainability packaging, and also the investment opportunity in recycling companies. BlackRock has partnered with the Ellen MacArthur Foundation in October 2019 to help fund the shift towards the circular economy, and saw an increase in the recycling as an opportunity for investors. So maybe, Tom, if you want to sort of give your thoughts on that in terms of it being an investment opportunity.
Muting myself. Definitely. So this focus on circular economy, as you said, started more than a year and a half ago. And we launched the fund last autumn. But and you'll see soon our first sort of semi-annual detailed report about how it's going. In the initial stages of the pandemic recently, the biggest question we were asking ourselves was if this crisis will take sustainability off the agenda for regulators, corporates, and consumers. And we've seen in many dimensions that it wasn't the case. We definitely saw it with our investors because assets continued to flow into sustainable propositions as opposed to less sustainable. But focusing back on packaging and circular economy, that debate about the focus on circular economy and this focus on the momentum continuing was very critical for the Circular Economy Fund. So what we've seen initially, unfortunately, was that there's been an initial sort of disaffection and less of interest and less focus on plastic pollution, material waste. We've seen a resurgence in disposable plastic, not just for PPE, but also for things like food packaging, single-use cutlery. This week, SABIC, which is the Saudi petrochemical company, made a strong case for single-use plastics, essentially calling an end to the sustainability debate. And what's also complicating the situation is that with the oil price volatility, the cost of raw material and virgin plastic has been cheaper than before. So we were monitoring very closely how companies were reacting to this. We've seen the public, the consumers, actually prioritizing the fight against the pandemic, dropping a little bit their guard on plastic. But reassuringly, every single company that we've spoken to in the last few months has reiterated their commitments to both carbon emissions and plastic pollution, fighting both of these. So we need to wait and see about that difference of approach between the consumer behavior and the corporate behavior. But we think that eventually consumers are going to come back and also take again a little bit more of a strict approach to plastics. We've seen with the crisis that the world can mobilize the population on a big crisis. If it was possible for COVID-19, it should be possible at some point for climate change and for plastic pollution. But at the moment, we still need efforts like the broad consensus of the EU recovery plan to build in additional momentum around the low carbon economy, reducing plastic single use, and the focus on the environment. So I think for circular economy, we expect a ramp up in plastic taxes in particular to fund these initiatives and to accelerate that theme. But it's an interesting time for this topic because it's not all positive at the moment.
Thank you. And I'd be interested also, that was really helpful. Thank you, Tom. I'd be really interested, Rob, in your perspective and how you're partnering companies on the topic of packaging.
Yes, I think the first thing we have to say is that when it comes to foods and beverages, food safety is the absolute priority. And of course, that has been shown to be everybody else's priority as well when we think of it through the lens of the pandemic. So let's just put that up there first. Food safety always. Second is, of course, access and affordability of nutrition. And I think it's important that we understand the needs of emerging economies in this debate, which I often feel rather overlooked. And I think we should not forget the importance of ensuring that people who have less to spend than perhaps those of us in the rich north and west can access the nutrition that they need. So just put that out there as a kind of backdrop. Second thing I think to say, in echoing what Tom said, and he said he'd asked a lot of companies about their sustainability commitments. Well, I can add Nestlé to the list of people that have said, yes, no, we are absolutely sticking with our commitments. And I've heard our chief executive on several occasions when asked, make very, very clear that the commitments that we've put out there, we are maintaining and we will continue to do so. And when it comes to packaging, the commitments that we have been talking about for the last year or so is a very simple vision and a series of efforts that we're making in partnership with others. The vision is simply this, that none of our packaging, including plastics, ends up in landfill or litter. None. That's the vision that we're striving for, and to support that vision, we've put our commitments out there, which is that 100% of our packaging will be recyclable or reusable by 2025, that we are going to innovate when it comes to new materials and delivery systems, and with that in mind, we've invested heavily in our Institute of Packaging Sciences, which is not just looking at the material side of things, but also the behavioural stuff. And this is maybe Tom and colleagues over at your place have got something to say about this, because it's about, how do you help consumers to understand, delivery systems that may be different from what they've experienced before. And the third part of our third pillar of our approach is to make sure that we're investing and supporting collection systems, sorting systems, and recycling systems. Because if we can keep the packaging out of the environment and close the loop, then actually, it's not about reducing all single-use packaging. It's about what happens to it after its use. That's the key to this. We have also committed that we'll reduce our use of virgin plastic by 30%. And the only way we're going to do all these things is by investment. And we announced some, what would it be, about 18 months ago, something like 2 billion Swiss francs of investments in this. So this is serious stuff. And we have to do it in partnership with others. So we too are partnering with the Ellen MacArthur Foundation within that context of circularity. We're partnering with the World Economic Forum, participating in their Consumers Beyond Disposability platform. And we're partnering on the ground with amazing organizations like TerraCycle and their Loop initiative, so that we can actually really get into the nitty-gritty of this on the ground where it matters most. So I think I understand that, as back to snapshots, this moment in time, that maybe packaging may not be front and center for people, but this isn't going away. This is going to keep coming back at us. And it should do. This is serious stuff. We've got to address it. And I think that's where there's a sort of interesting moment also here with regard to the activists. We welcome decent activism, and we've had challenges from the likes of Greenpeace in the past, and they continue to challenge us, and rightly so. It's their job. But one of the other things, when the organisations like Greenpeace and other campaigning groups have a really interesting role in my mind, which is to alert us to the issues that the public will be concerned about soon if they're not concerned about it already. And the history shows this over and over and over again. When it comes to the campaigning organizations, though, as part of civil society broadly, one of the other challenges I think we have to grapple with from a sustainability point of view is that many of these organizations are likely to be somewhat challenged when it comes to funding. Now, that's for people in NGOs to kind of address themselves, but it does strike me as being part of the landscape of sustainability that there are going to be resource challenges for the organizations that have helped shift the dial in the past. I have no idea what that means in the future, but I do think it's part of the mix to address. But as for us, we're committed to those packaging commitments, and we will continue to be so.
Thank you, Rob. I'm conscious of the time. I do think it would be useful for our audience to look at future ESG. You've already touched on one of them, Rob, which is obviously activism. And certainly, from our perspective, and we recently met with 6 of the global heads of activist defense at all the major banks. And certainly from their perspective, they believe that the S is very much going to be coming much more into focus, more than the E from an activist perspective. So we've already, we are seeing that in terms of the conversations we're having. It would be really interesting to get your perspectives from both Tom and yourself in terms of what are the future ESG trends other than activism, for example, and some of the things we've already discussed, that you think our audience should be aware of and start predicting and preparing for. So maybe, Tom, we could pass over to you. One of the things which I think would be really interesting is to get your perspective on whether you think institutional investors are going to be much more proactive in their engagement, their voting and their transparency in stewardship. BlackRock has, selectively made its views very public. And it'd be just interesting to get your thoughts, for example, on that particular topic, on whether you think institutional investors are going to be a lot more vocal.
Yes, absolutely. I think what you're seeing from institutional investors, asset managers like us, is a ramp up in terms of transparency and communication around our stewardship engagements. I think for many years, engagement with corporates and stewardship by asset managers was a very important function, but something that was happening not in the eye of the public. And I think with ESG, and especially with the environment so far, the public, the press, the NGOs have all piled up to ask and put asset managers, make them accountable to disclose why and how they vote, how they engage. So there's a complete kind of revolution across the sector to become much more transparent. So basically a communication exercise around how we engage and how we vote. Doesn't mean that we invent a new practice. We have that practice, but now we're aware that it also needs to be communicated externally. And that is because environment or social issues are becoming so hot and so debatable. Whereas in the past, it was important to our agenda with companies, but it was just focused on our work with the companies. So that's point one. So disclosures and transparency, yes, it will continue. It will actually get more and more granular. In our case, we are now publishing actually rationales and explanations for specific, more delicate votes that we are undertaking, and these are on our website, and they are for everyone to look and analyze to their leisure. We also present all the companies that we're engaging with and voting on. We have policies on how we vote for different sectors, etc. This didn't exist a few years ago, and this is not specific to BlackRock. It's just accelerating across the globe. And practices and legal environments are a bit different between the EU and the US and, let's say, Asia as well. So it's a balancing act between these practices and what the public wants. That's one point. In terms of additional trends, because that's an important one. When we talk to our clients, there are two things that matter most to them. One is, how do you, talking to us, how do we use ESG information in our investment process? Does it really matter? How do our research teams and our portfolio managers implement that? It's called integration, and that's the number one thing. And the number two thing is, how do you engage with the companies? Are you really pushing this agenda into the companies you invest in? So these are the two big points. But additional trends that we're seeing now is the environmental agenda is going to continue. What I'm seeing with politicians, regulators, and industry partners is the environment and climate change in particular are the hardest of the topics to make palatable to a wide audience. Two reasons, as someone mentioned earlier. It's hard to make it feel in everyday life, but most importantly, it's distant in the future. Some effects are being seen today, but it's mainly a distant in the future issue. And whereas the social effect of COVID-19 is present today. So no wonder that when we poll people in the public, the social issues come up first. And so a question more than a trend is, how is the environmental agenda of ESG going to be ranked in the next 2 to 3 years? My personal belief is it will continue to be the number one issue, because among industry players, political agendas, regulators, it is the big task to take at hand. The social issues are growing in importance, and to be fair, the trend that we need there is more reporting by companies about how they manage employees, their talent, diversity, how they manage suppliers, and how they look after society and their communities around them. Until we have more richer data reporting, it is hard. We use unconventional data sources such as the Glassdoor website to monitor employee satisfaction reporting, etc. For example, about managing talent and diversity in various companies. That is a type of information. But what I must say as well, that on the social angle, we are seeing some seeds of change. For example, in the Netherlands, the asset owners, so the insurance companies in particular, have all combined their efforts to require the introduction of social angles, especially around human rights, to be present in all the assets that they have under management. So they use the OECD guidelines and the UN guiding principles on human rights for that. It's old-fashioned sort of frameworks, but it's better than nothing. And they're making that sort of new S factor much more important. Today, our approach at BlackRock about the S angle is about stakeholderism. So again, like internal and external stakeholders, and we feel that's where we have decent data where we can actually influence our stock selection and make some sense for our investors.
Thank you, Tom, very much. That's really, really helpful and very, very interesting insights, which I'm sure our audience will appreciate. I'm conscious of time, and I thought I'd just, I'm sorry to cut you short, Rob, but I'm sure there will be a question from Helena. I thought it would be helpful just to pass over to Helena for any questions from our audience.
Yes, thank you, Vanessa. So looking at the questions, and there are quite a few of them, there are two sort of main strands, and I think Tom just addressed one of them, because it is about sort of the rising importance of the social factors. Well, that means less importance on environment. And I think as Tom and James said from the start, when we did our survey, we kind of put the three factors against each other, and that is of course probably not the realistic way of doing it, because in reality the total pie can grow as well, right? So I think that was already addressed. I think, Rob, maybe if you want to make a comment about that as well, we can take that when I let you in a second. The other strand of questioning, which is something that we haven't talked so much about, and that I want to ask both of you, starting then with Rob, is, okay, we have social, we have climate, but how do we get biodiversity on the map? How do we get people, how do we get corporates, how do we get boardrooms and investors to understand that that is actually where it starts? So to both of you, but starting with Rob then.
Yeah, just coming off mute. So I laughed, you may have seen, and there's a reason for that. Like I've been saying for 20 years, this is the year that biodiversity makes it to the front of the newspapers, and I've been wrong for 20 years, so don't ask me. I think that the clue is in the name. You know, if you say to anybody up and down the street biodiversity, they're going to go, what? And if you talk about, you know, gardens, if you talk about forests, if you talk about the things that people can appreciate about biodiversity, you know, it's everything, but it's nothing to people because it's too abstract. That's the problem with biodiversity. That's the first thing. Second thing, look, biodiversity, we are not going to be able to address climate change without a radical approach to natural climate solutions and issues like water conservation, natural habitats, peatlands and wetlands restoration. All of these things are going to be massively important in addressing climate. So in fact, actually, we might find biodiversity finds its place in the sun through another route. It's possible. So that I think is on that piece. And in terms of you know, will the focus move away from the environmental movement? I don't think it will. I think Tom's right. I think that, you know, we've got to expect that this is going to you know, these things are going to continue to be important to people, and they will change in emphasis from time to time. But don't underestimate things like Extinction Rebellion and so on. You know, I think that's they've highlighted things. It's not really on the front page at the moment, and it's not all down to Extinction Rebellion by any means, to say the least. But I think that campaigning will continue. I too am conscious of time, and I've got a few other points that I might have wanted to make around where this is going. But let me just pause there and see if you want to go in a particular direction.
So let's let Tom in then on the biodiversity topic, and then we'll revert back to you on the future, Rob.
I'll try to be very brief. So on biodiversity, it is a growing topic, and we've been approached several times since the beginning of the year, in particular from competitors or clients asking us to join in on the call for more data on biodiversity. Some of our clients are actually asking us already, can you please report how my portfolio is exposed to biodiversity? Data is scarce, it's very hard to do so far, but we know it's a growing importance. I think, aligning with what Rob said, social and climate are related, right? And there is a dimension of time. Social is here in the present, climate is actually here in the present, but people see it in the future. So we need to relate it. And I think biodiversity finds its place under the climate umbrella as well. because even though things are connected, we need to keep a simple, a clear narrative for our stakeholders. I was talking to an MP yesterday, and he was saying, I'm confused by ESG. How can you mix all this together? I understand if you talk to me about climate, I understand if you talk to me about social equality or racial injustice, but don't mix them both into a single sort of approach. It's apples and oranges. So we need to find a logic, and I think time frame can help, and the dependency, and also making sure that topics matter to the public. So I think making climate matter to the public through the lens of social, I think, is a fantastic idea.
So let's go back to the future then, Rob.
Yeah, so I think one of the key things in looking at the future is what the rules of the game are. And if we're thinking about the rules of the game, particularly in the EU, we've got the EU taxonomy that was passed by the European Parliament a couple of weeks ago. Their platform for sustainable finance, I think it's called, is going to set the implementation of that in train. So I think as the rules of the game change, then I think we'll see progress. And in fact, speaking of rules of the game, TCFD has possibly done more to accelerate climate action than anything I can think of. And echoing Tom's point and bringing back this biodiversity piece, one of the other ways in which biodiversity could become more in the mainstream, so to speak, of thinking is the possibility of a TNFD, in which we're looking at exposure to risks from natural capital. And that I have a feeling that just might take off. So, there's a few things going on in terms of the rules of the game. So I think that's where we look for the future. A couple of other things where I think we can potentially look. Secondly, around ideas and actors. I'm thinking of ideas. I am really struck by the work of Kate Raworth, and the emergence of donut thinking. Donut economics has gone from being a book some of us read about 3 years ago to, hang on a minute, I'm having conversations all over the place about that. And I think those sorts of ideas, which do bring together the concept of planetary boundaries in terms of physical capacity of the planet and the social floor that we cannot drop below if we want to live well, then I think those sorts of ideas, and then seeing them expressed by unusual actors. So Amsterdam adopting the donut model as its city plan is, I think, a really interesting thing. We look beyond business, look beyond investors and asset managers, look beyond NGOs, look at places like cities, for instance. So ideas and actors. And then the third point I would say is don't underestimate the power of technology, particularly when it comes to transparency. And going back to what we said earlier on, transparency is a key driver for both investor attention, but also for business action on all of these issues, whether it's financial performance or sustainability performance. So at the end of the day, actually, what are the things that business and investors are most concerned about? Have you identified risks, and are you optimizing the identified opportunities? And risk and opportunity will continue to be the bedrock of all of this work.
Thank you, Rob. And I'm very interested in your TNFD. It's a very interesting point. And also thank you for bringing up the donut economics of Kate Raworth, which is a point that I was going to mention. So I think in the interest of time, I just wanted to take this opportunity to thank Tom and Rob for taking time today to join us, to share their insights on sustainability and ESG, the trends and the priorities for the future. It's been a really interesting discussion, and I think what one can take away from this is that the S and the E are very much sort of interdependent. They are related. I think we need to look at them more holistically. Clearly, the social factors affect all stakeholders, and I think what this pandemic has done is it's brought into sharp focus the importance of health and well-being and safety of employees, very much points that I know, Rob, you have highlighted today. And then in terms of the focus on the environment, obviously this is going to be very much top of the agenda, as Tom has highlighted. We've got COP26, the UN Climate Change Conference next year in Glasgow in November. We've had this recent announcement from the EU Commission on the EU taxonomy, which is changing how people will invest. And there will also be these increased disclosures required by firms. So in summary, I think the next decade is going to be a really important one for tackling the world's environmental and social challenges. If we want to build back better, one that is resilient, healthy, fair, and carbon zero, it will be critical for us to focus on both. I'd like to thank you all for joining us today. I hope the session has been helpful, and we look forward to continuing our engagement with you on these really important topics. Thank you.